Today I'm learning liquidity. Like, I know what it is. As a matter of fact, in all of my research so far, they have said that liquidity is money. But I've now come to understand that it's literally what moves the market. Liquidity is what moves the market. But what exactly is liquidity? And there are so many interpretations of what it is. But today in my study, I realized that liquidity does not exactly equate money. They would say that it equates money, but it doesn't exactly equate money. And why do I say that? I've come to understand from my study today that liquidity actually means orders. Now, you see how the market works is, for every buy order, there has to be an opposing sell order for it to go through. If there is nobody that wants to sell the market at the time when you want to buy, it will not go through. And this affects the big players mostly, the BFIs. And why does it affect them? Because they're the ones that take huge amount of sales. Like, they take a wide range of orders, right? And there's no other person that wants to take that much order. So they split it into different parts. So for them to be able to take their sell order, that's why they need to first of all go to a point where they know that their buy order stop losses and that there are sell limits for breakout traders. They would now take those people out. So in that way, they are taking out their buy competitors. That's one thing that they're doing. And then they are creating sell orders that is going to help facilitate their own buy. Do you understand? So this is why liquidity works, because for them to be able to take their buy, they need sellers. And so they go to a point where they can take out the people that are already buying, that crowds up their market, and then now activate people that are willing to sell. So that's why it will seem like, oh, they want to. I used to think of liquidity as them just trying to take your money, right? But that's not, it's a byproduct. That's not the goal. The goal, it's not like, oh, that's one way to say it, but it's not the core idea. They're not trying to take your money. They're just trying to activate their own order. So at the end of the day, the market is a selfish game. Everybody is looking out for themselves. Do we get it? So right now, I'm currently learning the 3 different types of liquidity. So there's the transactional liquidity, there's the structural liquidity, and the inducement liquidity. So now that I understand exactly what liquidity is, I'm now trying to learn what the different types of liquidity are before I will now move to, knowing how to spot them and then how to use them in my analysis. So I've done transactional. Now I understand that transactional is used for expansion. It is the liquidity that is going to help you to move past a key level, a swing level, right? And it is usually resting at pullback level. So those places that you would think is your protected low, as in higher low in an uptrend, you will now see price come and sweep past it. When price sweeps past it, you now, as a basic SMC trader, would think that, oh, this is change of character. The people that trade breakouts and reversals, they would think, oh, price has changed character. Let us now sell, right? That sell does what for the big players? It creates opposing orders for them to be able to facilitate their own order. Do you see how it works? And it also closes out buy orders that are competition that, crowd their own markets. Do you get me? So that's what transactional liquidity is. So we've already talked about transactional. Now I want to do structural, but to explain that, I'm going to draw a diagram. So price is currently making higher highs, higher lows, higher highs, higher lows. We know that we're in an uptrend, right? Now, structural liquidity is placed at obvious points. The highs of an uptrend, that's the strong highs. Now, how does it work? Remember that, let's say price was going up, down, up. It now breaks structure here to tap the liquidity that is resting maybe somewhere around here. Those guys that used to trade breakouts will now think, price is about to change structure. So the price will now come and do something like this, right? They will now sell from here. So the idea is, I think I've even done this before. When an uptrend, right, price is creating higher highs, higher lows. The price now creates a lower low, but it only does that to tap transactional liquidity. But the guys that do basic SMC will think that that's change of character. Then for them to now enter, to continue with that assumed new trend, they will wait for price to go and tap into what they will say is a POI somewhere around here. Oh, let's go and look for FVG. Let's go look for demand zones. Demand, FVG, order blocks, breaker blocks, and the rest of that, right? So price comes and taps into that place now. Do not think, okay, actually it's going to be a sell limit. They will now put a sell limit here, right? The price will now come and sweep past their sell limit and continue up. Or they might even say, okay, let's say that their POI is now somewhere at the top here. That's the order block, or what they would now call supply zone, that is at the top of the swing high. They enter from there thinking that, okay, we've already done change of character here. So price should not break past this level, right? Since we have changed character, this is now a weak high. And this one, I really hope you understand what I'm trying to explain. But this is a weak high and this is now the strong low. Let us now sell. Do not put their stop loss here and put their take profit at this point here. Price will now go and sweep past it. This sweep where it sweep for here, so is what they call the structural liquidity. Structural liquidity is found at swing highs. It's used to shake out weak traders or to reverse trends sometimes, or just create more liquidity essentially. It's also used for correction. So once price has swept these people out now, it has swept out these false sellers, right? It has also triggered those people that want to buy from here. You know, some people used to do when price breaks a major high, they will now come and retest back to the zone and continue up. Price will now come and break them out. I feel like I need to show you a chart for you to understand what I'm trying to draw. But the point is that structural liquidity is found at swing levels that are obvious. Obvious swing levels. That's the high of highs. We have SL, SL, and then the lows of lows. SL, SL, right? That's where you find structural liquidity, and it's used to shake out, like I said. Shake out weak traders, reverse the trend, or correct the trend. So learn. Inducement liquidity is for tricking people. Inducement is equal to trick. Right? And what do? We've already established what transactional liquidity is. Price will come and sweep past this level and continue up. Take out these guys. Do this thing here. Do this thing here. Now you think that this is the pullback. Price will now come and sweep it. Fuck that. Did you guys see what I did there? We know that we're in an uptrend. Price is making higher highs, higher lows, higher highs, higher lows. Then price has taken out the liquidity that is here for transactional liquidity. There's also liquidity here for these guys that went to go and zuzu and think that we have changed character. He has also taken them out here. So what is now the inducement liquidity? You now, you have your buy stop here, right? Some people want to buy from here to continue up. But price comes and does this. You think that this is the new higher low because we're in an uptrend now. You think that this is the new higher low. Price will now do it all. They will not trick you. It will not actually go up to create a new higher high. You will not think, I've created a new higher high now. That means that this is the pullback. You will now come and set your stop loss here. Right? And targets that if price comes here, it should go back up. They will now come and take you out and tap into the real zone. But the core idea of inducement is that they trick you. They make obvious setups. They will print obvious patterns that will deceive you into placing an order that will now go in their favor. Do we get it? Don't get it. I don't know how else to explain it, but understand how this is inducement. And that's why for you to be able to avoid this thing, and they'll tell you, they'll tell you it is better for you to buy at discount level. If I put my feet from this level to this level, there's no way this thing is at the premium, at the discount or 50% or equilibrium level. The equilibrium level will be somewhere around here. Do you see that it's still far? Price will now come and sweep you. This is now inducement liquidity. Price will now come and sweep it and come down here before it to continue back up. It has already closed you out somewhere around here. Do you understand how it induces you? So this is our our SL. This is TL. And that's IL. Do we get it? This inducement liquidity tricks you because it created something that you thought is already a pullback. But it is not enough to say it's a pullback. It's liquidity. I hope that you've learned one or two things from this lesson, because I've learned a lot just by, talking to you guys, whoever you guys are. And like, my mind is now more open to this. And like I said, this is how I learn, by just talking or teaching. In fact, I've always known that for you to be able to trade well enough, I'm not there yet. I'm not at the point where I'm like a very good trader. I'm still trying to build my psychology, my strategy, or just understand how the market works. But what I think is that for you to be able to even be a good trader, you need to be able to read the market. I've always been a believer of the market tells a story. I'm just going to write my note, but I need to put it in my Telegram channel. I have a Telegram channel that, I'm the only member of the channel. I'm keeping it for future reference, just like how I'm thinking I'll probably upload this video on YouTube. And it will be like, how things like this, it builds credibility, gives you authority in your craft, because you've been in the game for long. So I'm thinking this is going to do that for me.